It's the morning of September 16, 1992. A 62-year-old George Soros is fast approaching retirement but wants a big win before that. He spent the last night setting up a trade that would later be known as the greatest trade of all time. As soon as the markets opened, the British pound starts crashing and the world realizes what Soros has done. The government is in panic mode, and at 7:30 a.m., an emergency meeting is called between the Bank of England, the Prime Minister, and the Chancellor. Seeing this, George Soros can smell his victory and is thrilled. He has spent the last night selling $10 billion worth of British pounds in an attempt to crash it. But the Bank of England isn't going to give up that easily. The government spent a total of £27 billion and increased interest rates by a mind-boggling 5% in a single day to stop the crash. But after a long battle, Soros won and the pound crashed by 25%. He had successfully defeated the Bank of England and made $1 billion. George Soros is undoubtedly the most fascinating man in finance. He's a speculator who enjoys taking huge risks and understands the global markets like no one else. But he is also filled with controversy, with people calling him the most powerful man on earth and a manipulator of major world events. But he is a man who truly believes he is a god, so who knows? But when you look at his origins, it might give you an idea of why. This is the story of George Soros, the most powerful man in finance. George Soros is a huge risk taker, and he got that from his father. His father was a prisoner of war in Russia after the First World War, but he escaped somehow, and after years of running, made his way back to Hungary. By the time George Soros was born in 1930, he was a successful lawyer, and George Soros had a fairly normal childhood. But it wasn't going to last. Soon after Hitler came to power, the genocide started, and it was spreading throughout Europe. Hungary had one of the largest Jewish populations, and in 1944, Germany finally invaded Hungary. It looked like the end for George Soros, but his father was determined not to get captured, and he had the skills. He had successfully hidden from the Russians before. So he took his family and started going from safe house to safe house. This lasted till the war ended in 1945. This is where we start to see a glimpse of Soros's personality, something that would define him later on. Most children of Soros's age were deeply traumatized by everything, but not Soros. He found it thrilling and exciting, as if he was on an adventure. George Soros wasn't an instant success or a child prodigy. In fact, he was quite lost for most of his 20s. He left for the UK in 1948, but didn't have any real plans. Initially, he did some odd jobs like waiting tables, but eventually got into the London School of Economics. This is where his defining moments in life started. Surprisingly, he wasn't too interested in economics. He loved philosophy, though. But here, he would meet his biggest influencer in life, Karl Popper. Karl was a philosophy teacher and one of the most influential philosophers of the 20th century. He taught Soros an interesting idea. He believed that perfect knowledge doesn't exist, and everyone makes decisions based on their imperfect knowledge of reality. This idea intrigued Soros and would later be the basis for his reflexivity theory that made him billions, but more about that in a minute. For now, Soros wasn't really interested in finance. He wanted to become a philosopher. But soon, reality hit. He could not afford a philosophy graduate school. Disheartened, George Soros now only had one mission: make $100,000 somehow and retire so he could pursue philosophy. And luckily for Soros, the early 50s was particularly a good time. World War II had just ended and financial markets were slowly booming. There was money to be made. So right after graduating, he got a job as a trainee trader in a merchant bank. There, he learned arbitrage trading of precious metals like gold and stocks. I know what you are thinking. But no, he didn't do anything impressive here. Instead, he didn't like it and quit right after 2 years. Later, he would say, the investing ideas simply did not resonate with him. By now, Soros was 25 and still quite lost. So he decided to take a gamble and go to the U.S. After World War II, the U.S. emerged as a superpower. Its infrastructures were intact, workers productive, and business was booming. In 1956, he moved to the U.S. and worked as an arbitrage trader, hoping to make it big and retire early. But he couldn't find an edge, and for a few years, struggled. This is when Soros would try thinking differently. You see, Soros had studied economics in college, but he never agreed with classical economic theories. One theory, called the efficient market hypothesis, was particularly famous back then. The idea was participants in financial markets operate on the same set of information. Because of this, the stocks are priced perfectly, and there is no money to be made. But Soros strongly disagreed and believed what his mentor Karl Popper taught him. Everyone is operating on an imperfect knowledge of reality. If he could find these gaps in knowledge, he could win big. Soros's fascination with philosophy also made him think more broadly. He was always focused on the bigger picture, something that would later be known as macro investing. Soros started testing these theories and he was spot on. He finally got an edge. In Soros's own words, "Markets are chaotic. They don't work by logic or information. They work on mass psychology and herd mentality. Understanding how the herd will react gives you an edge." Soros was finally getting some results, and by 1969, he had made $250,000 personally, and many people rich. But he hadn't gotten the chance to operate independently and make big decisions. And to test his theories properly, he needed that and a lot of money. So, in 1969, George Soros opened his own fund. He had made many European clients rich, so credibility wasn't a problem. He raised $6 million at the start, and soon he found a huge opportunity. Real estate was booming in the 60s, and everyone was buying real estate trusts. Like always, he looked at the bigger picture and realized this was a classic boom and bust story. He predicted the market would crash after 3 years, but go up a lot before that. So he started buying, and this time, Soros went all out. He invested all the money into real estate trusts and made $1 million in the first year. But he made even more money when the market crashed. By 1973, the initial $6 million was now $50 million, and investors were thrilled. By 1980, he was one of the most famous investors ever, and his fund continued to grow at an insane 30% CAGR. By now, he managed almost $400 million. Till now, Soros had never faced a huge failure, and he was riding the wave. But like all good things, this came to an end. By 1980, the U.S. economy was in ruins, and Soros had made a killing predicting this. The Fed made a controversial decision to control inflation. During a recession, raising interest rates is the worst thing anyone can do. It makes people spend less. But inflation was so high, the Fed decided to raise interest rates anyway. Soros believed this would cause mass unemployment and recession and bets against the U.S. economy. You see, Soros wasn't your typical investor who believed in diversifying. If he believed in something, he bet big. It wasn't uncommon for him to have 80% of his portfolio in one stock, so he bet big on the U.S. markets collapsing. But surprisingly, the U.S. economy doesn't collapse, and Soros loses $80 million. For someone who has never lost big, this was devastating, and he didn't have the will to continue. So he decided to retire and focus on philanthropy. But Soros isn't a man who can retire so easily. After a few years of retirement, he decided to come back in 1985, and his success continued again. In 1986, his quantum fund returns 122%, and he is back in the game. But it wouldn't be until 1992 that he made the greatest trade ever. In 1990, euro wasn't introduced yet, and European countries had their own currencies. But in 1979, European countries decided to peg their currencies at a fixed rate. This is normally a good thing for people as creates stability and ease in trading, but for central banks, it's a nightmare as they can't independently set interest rates. Seeing this, the UK didn't join initially, but after John Major won the election in 1990, he forced the UK to join this peg. Both economists and investors saw this as economic suicide, as the UK was already in a recession as the pound was slowly losing value. In a recession, the best weapon available to the central bank is changing interest rates. If the interest rates are low, people will buy more and businesses will spend more. But when the UK joined the peg, it had to use interest rates to manage this peg. So, if the pound decreased in value too much, it had to increase the interest rates in an attempt to attract foreign investors to invest in pounds. If this sounds too complicated, just remember the pound was crashing slowly and the UK just did something to make it crash even faster. Every currency speculator, including Soros, knew the UK couldn't hold this peg and the British pound would crash. So in late 1991, he started to build a position against the British pound. By September 1992, he had built a $1.5 billion position, but the pound wasn't crashing as he hoped. Soros needed some catalyst. The catalyst came on the 15th of September 1992. The president of the Bundesbank held a seemingly normal interview where he said, "I don't rule out the possibility that some currencies might come under pressure." What do you do when you have no real catalysts? Build your own, of course, and that's what he did. He needed to do something big and fast, something that no one will see coming. That night, he sat down with excitement and thrill as he called anyone and everyone that would let him borrow the British pound to short it. He bought German marks, hoping this catalyst would be enough to crash the pound. And in the morning, the battle began. Soros flooded the market with the equivalent of $10 billion in pounds. The British government didn't see it coming, and at 7:40 called an emergency meeting. They spent £1 billion trying to buy stable the market. At 8:40, another $2 billion. But it didn't even help a bit. Since the UK was in a recession, raising interest rates to prevent the crash would cause mass unemployment. But after a while, the government saw no way out and raised interest rates by 2%. This didn't help, though. Speculators believed it to be a sign of weakness and kept betting against the pound to crash it. At 2 p.m., the central bank raised interest rates by 3% again. By this time, they had already spent $27 billion and raised rates by 5% in a single day. But in the end, the British government lost and the pound crashed by 25%. Soros made $1 billion overnight. After this, Soros practically retired and focused his efforts on charity. That's what he is doing to date. He has given about $32 billion away, and his net worth stands at $8 billion. The life of George Soros is that of a speculator who doesn't hesitate to bet big when he believes in something. It's a story of ambition, brilliance, and a contrarian mindset. A must-have for anyone aspiring to become successful in the stock market. So, what do you think about George Soros? Comment that down below and don't forget to subscribe for more videos like this.